Hello, friend. Let me guess. You are here because you are wondering if Tesla is at a good buy entry point. Right? Well, if you look at other YouTube videos on this topic, it seems almost everyone thinks it's a great time to buy Tesla. This pullback is a gift and everyone should buy it. Should you be buying it too? Here is my opinion. First of all, to clarify, I'm not talking about scalping, day trading, or holding Tesla for a few days. If you want advice on that, this is not the right video for you. I'm talking about buying here Tesla and holding it for a longer time frame, like a few years or so. That being said, of course, we must check the monthly chart of Tesla. There is no point looking at a smaller chart. You won't find any clues about price action for the next few years on a daily chart. I really hope you agree with me on this subject. You need to look at the bigger picture. So, here it is. The monthly chart of Tesla, nice and clean, with a 48 months moving average, this dotted blue line. A trend indicator, this one below, and a volume indicator, this one at the bottom of the chart. Nothing else fancy. That's all I need from a chart. So let's start with the obvious. What is obvious on this chart? Do you see it? Do you see it? What do we have here? Well, Tesla is back to this important price zone. This was a major resistance in the past. Look. Boom. Resistance. Boom. Resistance. Boom. Resistance. Boom. Resistance. Boom. Resistance taken. What happens when resistance is taken? It becomes support. 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 And we don't know yet. Maybe support. So you see how important this price level it is for Tesla stock. I see it, you see it, everyone else sees it. It's easy to spot it on this chart. Yeah? Okay. The next thing. Look at the beautiful moving average. And tell me what happens when the price declines to the blue dotted moving average. What happens? Well, look what happens. Every decline stops at the moving average and then bounces up. This moving average acted like a perfect support zone 4 times in the past. 1, 2, 3, 4 times. And now it gets tested the 5th time and tries to tell you that you should buy again. It sure worked in the past. Look, if you bought here, if you bought here, if you bought here, if you bought here, you'll have made some very nice profits. I agree. So right now we have Tesla again at this double support zone now. Horizontal line support and moving average support. This is very good from a trader's perspective, because it's smart to buy stocks at support. However, there are some problems on this chart, and they are not so easy to spot. First of all, let me tell you from my personal experience. If a chart pattern is obvious if a chart pattern is so obvious to so many people, it's less likely to work. But this is not enough to dismiss it completely. So here are my real reasons why I think this support level won't hold, and Tesla price is gonna fall more from here in the next month. Reason number one: buying pullbacks, it's my best strategy ever. I have used it with success in the last 15 years, and I think I have bought thousands of pullbacks in stocks. I'm pretty much an expert on this pattern, and I'm telling you, you shouldn't treat pullbacks equally. Listen carefully. On a clear uptrend, the first pullback to the moving average is the best pullback you'll ever buy. This one. This is the first pullback to the moving. This is the perfect spot, the lowest risk, high reward point you'll ever get to buy a stock in an uptrend. I mean, the second pullback, it's okay-ish. I rarely buy the third pullback, and only on high growth stocks that I really believe that they will explode higher. However, right now Tesla is at the fifth pullback. Every time a support zone is tested, the more occasion is tested, the less likely is to hold in the future. It's like hitting it with something. Eventually it's gonna crack. Reason number two: a healthy pullback must come from new highs. Look here, see? Pullback, price make new highs, and then it comes back to the moving average. This is what I call a healthy pullback. But look what happens next. The price bounces obvious from the moving average and fails to make new highs. It gets rejected hard and immediately comes back to the moving average where it finds support again. And now again, same pattern, fails to make new high and comes back. Guys, this is not a trend anymore. This is, in best case scenario, this is a consolidation pattern. This is not a trend anymore. If prices fails to make new highs and then come back to the moving average, that's a very weak pullback, and it's less likely to work than a healthy pullback. I'm not saying that it never works. I mean, obviously here, look, the price failed to make new highs, come back to the moving average, and bam, rallies after and make a very nice trade. Here it worked, but so this is an example where it worked, but in general this has lower odds of working than a healthy pullback. Okay. Now reason number three. Let's look at the volume. Last year volume, 2018. Yeah, we see here 4 biggest green volume bars ever on the monthly chart, and yet no follow-ups. What do you mean no follow-ups? I mean no new highs after this Usually in a healthy uptrend, when you see big volume coming, you expect new highs. When price fails to make new highs on big volume, that's a very red signal. Think a little why. What does this actually mean? It means that there are a lot of people who bought Tesla here, right, in this zone. All the people that bought Tesla last year. I mean, all these people are now, except maybe the few ones that bought here, are right now sitting in loss. Unless they sold earlier, but the ones that didn't sold are sitting in red. And what do they hope? They all of them hope that this support level holds again, because most likely everyone has their stops below the low of these bars, probably in the 240 area. Think what will happen if prices start to curve down and we see this area where everyone else has their stops. What will happen? We'll see a panic selling accelerating by stops being taken out. You understand what I'm saying? I hope. So now the entire picture become a little different than it was. Not so nice anymore. The reality is that we are right now in a weak pullback, and is a 5th time pullback coming from lower highs, and there are a lot of buyers sitting in red. I'm telling you, this is not a pullback you wanna buy ever. That being said, for me, this are more than enough reason to pass this pullback. It definitely does not offer the risk reward I'm looking for. Even if Tesla recovers from here, I don't know. Even if it makes new highs, I don't care. I learned over the years that it's simply not worth it to take these mediocre setups. It's much better to skip them entirely. Yeah, I miss a few good trades here and there, but I would have been taking a lot of losses from the bad ones, and overall I'll probably be in the red. So it's much better to focus on buying these pullbacks, the first one and the second one. Don't get me wrong, I'm not saying you cannot buy any more Tesla because you missed the first pullback or the second one. You absolutely can, and I will buy it too, but not right now. Have patience and wait for a pullback to the other important moving average, the 200 one, which is probably around 180. It's not showing on the chart because Tesla doesn't have 200 month yet. But you know why that pullback will be so great? Because it will be the first pullback to the 200 moving average. See how simple are things? All you have to do is wait for the setups to come to you and choose only the best ones. So right now, for me, this is a pass. Alright, that's it. I rest my case now. But I'm very curious to hear your thoughts on this also. Does anything I say make sense to you? Do you agree? Do you disagree? Please leave a comment below. Thank you and happy trading.